Ladies and gentlemen, good day and welcome to Aarti Industries Limited Q2FY23 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Solanki from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Aarti Industries Q2FY23 earnings conference call. Today, we are joined by senior members of the management team, including Mr. Rajendra Gogri, Chairman and Managing Director, Mr. Rashish Gogri, Vice Chairman and Managing Director, and Mr. Chetan Gandhi, Chief Financial Officer. We will commence the call with opening thoughts from Mr. Rajendra Gogri, who will take us through the performance, update on growth initiatives, and outlook on the business. Post this, we shall open the forum for question and answer, where the management will be addressing to queries of the participants. We have to share our standard disclaimer here. Some statements that will be made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation that has been shared earlier and also uploaded on stock exchange website. I would now invite Mr. Gogri to share his perspectives. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and welcome to our Q2 FY23 earnings conference call. We have shared our results document, and I hope you had an opportunity to go through them. We have reported a resilient performance during the period under review, which has come on the backdrop of continued inflation in key input costs, both on raw materials and utilities, some slowdown in end-user industry like linked to dyes and pigments, extreme foreign exchange volatility, as well as uncertainties prevailing in the global market. Our performance was a culmination of solid expertise attained in managing multiple chemistry processes with superior execution track record. We added to our delivery commitment, thereby winning customers' trust and further deepening our relationship with them. Our knowledge and capabilities demonstrated in several product value chains linked to benzene and toluene is best in class, and we are replicating the same to create strong foundation across other adjacent chemistry value chains. In a significant development, we received honorable NCLT approval to demerge our pharma business into a separate company named Aarti Pharma Labs Limited. This will extensively enhance value for our stakeholders and also help us achieve operational efficiency. Mainly, this will help both the companies to take appropriate strategic decisions in view of the growth opportunities available. We have been expeditiously working to conclude this and expect the listing of Aarti Pharma Labs Limited to take place sometime in December 2022. Let me quickly share some of the key financials for Q2 FY23. Before that, let me inform you that the financials for Q2 FY22, Q1 FY23 and H1 FY22 were recasted to consider the effect of scheme of arrangement for the demerger of pharma segment from the appointed date of 1st July 2021. Our revenue increased by 29% YOY to 1847 crores, with export contributing over 50% of the total revenue. EBITDA improved by 5% to rupees 267 crores, normalizing the impact of shortfall fees in Q2 FY22 of rupees 52 crores. The EBITDA growth in Q2 FY23 is over 30%. Profit after tax stood at rupees 124 crores. Our revenue momentum was fueled by the stable demand category for key products under the essential end usage, further aided by volume gains. As was highlighted in the past, we are seeing slower demand for products associated with end user industries of dyes, pigment, etc. And to that extent, the performance appears moderate. However, we expect demand to recoup from Q4 of FY23. While the raw material and utility costs have remained elevated during the quarter, we have a strong pass-through mechanism in place to pass on this cost pressure, thereby protecting absolute profitability. We expect the elevated input cost scenario to soften in Q3. EBITDA was higher, supported by product optimization and increased export revenue. Absolute profitability levels were maintained during the period, considering the slowdown in demand due to global factors. We have utilized this time to take up the maintenance work in our Jagadia location. As a result, the volumes for a few products were lower in Q2 FY23. Profit after tax appears muted owing to the higher finance cost due to negative forex mark-to-market impact of rupees 20 crores. An increase in depreciation in line with new capacity added in recent past. With the current performance for H1 FY23 and the visibility that we have for H2 FY23, we expect our FY23 EBITDA to be around about 1100 crores. Now let me turn attention to the production details for Q2 FY23. Production of nitrochlorobenzene stood at 20,276 metric tons, while the same for hydrogenated and came in 2,558 tons per month. For nitrotoluene, the production for Q2 FY23 stood at 4,954 metric tons. Production levels were lower due to the maintenance shutdown that was taken at the Jagadia facility. This will benefit us to maximize on the operating time when the demand resumes back. Let me now move your attention to some of the expansion initiatives announced and updates around that. Project into the first long-term contract is scaling up as expected, and we anticipate a high utilization level of about 70% by next financial year. The recently commissioned facility that houses the second long-term contract is getting utilized in phased manner, and we expect to generate the EBITDA as guided by the contract terms and shared earlier. Construction and other plant-related activity associated with the third long-term contract at Jagadia is progressing well, and we expect commissioning towards the end of this quarter. Several other projects, including brownfield expansion of NCB facility at Vapi, are underway and will start getting operationalized progressively in next 4 quarters, and thus will be contributing meaningfully from next financial year. In respect for our ethylation capacity at Dahej, SEZ, which is operating nearly at 90% now, is being tripled with an investment of about around rupees 200 crores and is expected to come on stream in H1 FY25. We are also planning for further debottlenecking of our nitrotoluene capacity. The product will enable us to cater to few high-growth agrochemical molecules and applications. During the half year ended September 2022, we entailed a capex of rupees 577 crores towards the growth initiative outline and target the annual capex to be about 1100 to 1200 crores. Full benefit of various of our current ongoing projects will be visible in FY24 and FY25 as we anticipate some demand recovery from Q4 of FY23. While volume ramp up from new capacity will come in the next 2 years, the fixed cost will not generally rise to that level, thereby resulting in strong gross profit to EBITDA conversion from FY24 onwards. With this volume ramp up, we anticipate our EBITDA to grow at CAGR of about 25% for FY24 and FY25. Collective CapEx for FY24 and FY25 is expected to be around rupees 3,000 crores and will steer our momentum in the forthcoming periods. Through this, we plan to create a newer chemical value chain and also introduce high potential products that will expand our addressable market opportunities and will also cater to increased demand from key end user customers. We have built a very strong R&D team with 250 plus engineers and scientists working on several high potential projects across segments, including some of the sunrise sectors. Our expertise in wide-ranging chemistry with focus on technological expertise is driving gains in a sustained manner. Currently, we have 50 plus products in the R&D pipeline of chemicals at various stages, and this will help accelerate our performance trajectory. Our utilization level across plants are being ramped up based on steady demand. We have created a strong foundation through an integrated and well-diversified business model with relentless focus on R&D and chemistry capabilities. Our deep connection with key customers will drive sustained growth and profitability going forward as well. The roadmap looks encouraging and will continue to capitalize the opportunities created through rapid shifts in global chemical supply chain. Focus on R&D-led product offerings together with incremental gains from existing value chain will propel our value proposition. That concludes my initial thoughts and will now request the moderator to open the floor for the QA session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Aditya Ketan from Smith Institutional. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, first question, sir, if you can provide the breakup into the top line, so from our core business and from the custom synthesis business, that is the contract 1, 2. So so now we can provide the breakup of revenue into core and into the custom synthesis part.
So I guess the revenue from the contract would be relatively lower. We'll have to, I don't have the numbers right now. in some single-digit numbers. We'll have to see the numbers and come back to you later on.
We can just add that our value-added product, which we generally guide, so 78% sales is coming from value-added product.
Okay. So that's so what I wanted to know, so this quarter-on-quarter growth of 5% into top line, how much was it from the core business and how much was it from the contract one and contract two?
The contract one is already terminated, so there's no connection of contract one as such. And as Chetan mentioned, the contract two will not have any significant addition in Q2, I think. So that number will not be available and so.
Okay. Sir, we have also taken maintenance shutdown. So what was the one-off impact into this quarter? And how much volumes has been impacted because of this?
Yeah, our nitrotoluene, PDA and chloroaniline, all those volumes were impacted. So that's why the numbers of nitrotoluenes are also low and PDA also are low in this quarter comparatively.
Okay. Sir, we are also doing so debottlenecking of the nitrotoluene capacity, as said by you into your initial remarks. So, how much would so we are planning to expand on the base capacity? So, 15-20% addition we can take, and what would be the CapEx figure for the same?
Yeah, we are fine-tuning the capacity. Current capacity is about 30,000 tons, and we are now fine-tuning the debottlenecking. I think around 45,000 tons is what we are targeting to debottleneck to.
45,000 tons. And what would be the CapEx, sir, similarly?
No, that is still being worked out, whereas the ethylation is a brownfield plant. So that already the construction and everything is started. So that capex is about 200 crore. And there we are increasing the capacity to 3 times. From current capacity about 7 to 10,000 tons will become a 3 times for ethylation.
Okay, got it. And sir, just one last question, sir. Are we witnessing the benefit of the freight cost as of now? In this quarter, we had got the benefit and that should continue, or still we are witnessing that freight cost is elevated for us?
No, the freight cost is coming down in the current quarter. So in the Q3, we will see freight costs coming down.
Okay, so from the current quarter, so we should see improvement into the margins from the freight cost.
Yeah, the freight part. But largely, we had done freight pass-through for most of the larger, contracts. So overall, we may see some improvement, but it may not be a very meaningful number.
Okay. So just one last question, sir. Onto the raw material side, so how is the trend now? So we have been witnessing that the raw material prices are going down, like benzene, toluene, and phthalic anhydride. So this should benefit the company, and like in case when the raw material prices decline, how confident are we can maintain the gross part and in the coming quarters, like?
Yeah. So basically, the raw material prices are definitely coming down, and we have a pass-through mechanism where we have a quarterly or a monthly lag of pass-through. So whatever those lags are, we will get advantage to that effect. But largely, the raw material is also on a 1 month prior procurement basis. So on export side, wherever we have 3 month lag of pass on, so there we will get benefited.
Okay. And so just one last question, sir. So generally, like, so now we are only focusing into the specialty chemical business. So would it be possible from next quarter so we can give the revenue breakup of the nitrochlorobenzene, the PDA segment, the dichlorobenzene? So that would help us dwell more deeper into the company's specialty chemical business. Because now the pharma business has been excluded. So if possible, sir, if we can provide more breakup onto the numbers, that would be helpful, sir.
I think anyway we are providing you the quantity breakup, so I don't know, further breakup we will have to deliberate and get back to you how we can do.
Sure, sir. Thank you, sir. That's it from us.
Thank you. The next question is from the line of Vivek Rajamani from Morgan Stanley. Please go ahead.
Hi, sir. Thank you so much for this. Two questions and just two small clarifications from me. Firstly, sir, you'd obviously highlighted in the previous quarters regarding some challenges on the raw material sourcing side. If you can just provide an update in terms of how the situation was in this quarter and how do you see this evolving in the next few quarters? That's the first question. And secondly, if you could just provide an update on some of your own remedial measures that you're doing, which you'd indicated in the past quarter. Thank you very much.
Yeah, the nitric acid, there was no significant impact of any nitric acid in Q2. And in second half also, we don't expect much impact of nitric acid because some demands are also overall in the market is subdued. And some more capacity will also come out of nitric acid in second half. So even the next year, there should not be much issue regarding availability of nitric acid. What we had announced our plan that will get our planning was to commission in Q4 of FY24 for a concentration plant.
Understood, sir. And just two clarifications. On the maintenance side, which you had this quarter, did you specify what was the period of the maintenance shutdown?
About 3 weeks in Jagadia.
Got it. And I'm not sure if I missed this. You gave the volume breakup, but did you also give the numbers for the PDA volumes?
Yeah, the PDA Q2 numbers are around 242 per month.
Thank you so much, sir. I'll get back to the queue.
Thank you. The next question is from the line of Abhijit Akella from Kotak Securities. Please go ahead.
Yeah. Good afternoon, sir. Thanks for taking my questions. Just a few data-related requests, if it's possible to share these on the call. One was with regard to the restated financials, if it's possible to share with us the base EBITDA and PAT for the years FY22 and FY21. That would be helpful.
Come again? What are you looking at for?
So, following the restatements, following which we have only the specialty chemical financials now. So is it possible to get the base numbers for FY22 and FY21 just in terms of EBITDA and PAT for the remaining business?
FY22 9-month number will be available because this is from July 21 to March 22. I think that number is available.
Okay. But a full year base won't be available.
Yeah, because the effect appointed date was 1st July 21. So post 1st July 21, we have all the quarter numbers for both chemical and pharma separate.
Okay, fine. I understand. Thank you. And the second thing was just with regard to the demand softness that you pointed to. So what exactly are the factors that lead us to expect a recovery in demand in 4Q of this year? And what exactly were the reasons for the margin pressure that we saw this quarter? Was it combination of higher raw material costs as well as the softness in demand? How would you describe that?
Yeah, demand, we have been in touch with the customers basically, and generally there is a feedback now some recovery of especially on the diester side to start coming in. Actually, pigment side, the impact has started a little later on. So I think pigment side recovery also might be little later on. So that is mainly coming from our customer side. That's how they see the demands shaping up.
And the margin pressure this quarter was primarily because of falling benzene costs and maybe some inventory related pressures because of that, or was it something else?
No, overall margin, I think there's not much difference than in product mix and some raw material price and everything. Broadly, I think the EBITDA will be down by about 5%.
Okay. Fair enough. One last thing, sir.
On the benzene price also, just to add on it, I guess the benzene prices are also fairly similar. So the reduction, as Mr. Rashid Rubhi shared, that the price reductions would start being seen from this quarter onwards.
Okay, understood. And one last thing for me was just if it's possible to share a volume growth number for this quarter.
This year the volume growth will be very substantially flat. It won't be anything because we have this shutdown which was taken up. Right?
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. First question is, in terms of exports, on a sequential basis, the number looks quite promising. So was there any currency benefit? And allied question to that, Q2 has been pretty strong in terms of exports, and in Q3 we are already 1.5 months, done with. So any demand-related challenges from the export side that we have faced in the last 1.5 months? Thank you.
Yeah, some of the pigment intermediates, as I mentioned earlier, so we are seeing some challenges. But the other sectors, we don't see much challenges as far as exports are concerned.
Right. And any currency benefit on a sequential basis?
I think Chetan will be able to answer. Currency benefit, there was
structurally, rupee depreciation benefits us. So, to some extent, there will be a benefit of that, which would have been there in Q2 as well. The numbers would be in the range of around 8 crores or something, 8 to 10 crores. But the aspect is that we do have forwards for part hedging the export over the next 3 years. So there's also a limitation in terms of not everything which is there as a part of our export is completely open. So then the benefit is limited to those forwards, and there is anyway accounted by way of the market accounting.
Right, got it. The second question is just a bookkeeping question. So we have restated the numbers for FY22. Can you give the gross block by end FY22? We have given the net block.
Yeah, so the gross block of FY22 should be around 5,000 crores.
This is only pertaining to specialty chemicals, the business which is now remaining.
Roughly close to 5,000 crores, yes.
Right. Okay. And just one last clarification, I missed the number on NCB volumes.
NCB volumes was 20,276 for the quarter.
Right. Got it. Thanks a lot and best of luck.
Thank you.
Thank you. The next question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Hi, sir. Good evening and thanks for the opportunity. Sir, a couple of clarifications. First is on our dicamba intermediate sales. So if you can just give some sense that how has been the utilization level for the current quarter on dicamba intermediate?
Yeah, overall, I think current quarters not significant, about 10% level. Yeah, on that. But progressively, I think will go on increasing.
Okay, so 10% is the only utilization. While I think that by FY24 next year we are looking some 70% utilization level to go up, right?
No, actually my mistake. Around 25%. Sorry, the number was around 720 tons per quarter, and that will be on a against quarter capacity of 2,400. So it will be around 25%.
So like 25% utilization level, is this entire block related to this intermediate? Will it be break even or it will be dragging the profitability or?
No, so we will expect progressively from second half onwards capacity utilization to increase.
Okay, I'm asking at 25% in the current quarter.
Yeah, currently it will not break even. No.
Okay, it will be some losses there.
Yeah.
Okay. So second is in terms of guidance of roughly 1,100 crores for this year, you're looking in EBITDA, while almost half of that we have already done in the first half. So you're clearly indicating that in second half there won't be any growth, while we have a large capex commission already, and current quarter is already weak. So just wanted to understand the thought process that second half will be just exactly first half, no volume growth, particular reason for that.
Yeah, I think the dyes and pigments segments are weak. So I think that will continue in the second half also. So I think that is the main reason there is for lower guidance. And hopefully the things start recovering in the Q4, and so next year, we don't have any impact of this slowdown in this segment.
Couple of capacities are coming on stream in the second half, so there will be component of fixed costs like your manpower and other stuff which will also start kicking in.
Right. And sir, in the segment wise, you mentioned that dyes and pigments is a drag right now. It's primarily coming from the European market because of the inflationary scenario, or what is the particular reason for it? And also, in which segment, I mean like agrochemicals and all, we must be seeing a good growth. So if you can just give some segment, which are the segments are drag and which segment you are seeing the good growth?
The pigment impact is global, so basically, whereas dyes generally impact is more on within India. Most of the dyes intermediates consumed in India, and some export also. Whereas some of the agrochemical and additive business are quite strong.
Okay, sir. So that is from my side.
Thank you. The next question is from the line of Meet Vora from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my first question was towards our earlier guidance that we are saying that we are facing shortage of nitric acid, and as a result, volumes might be impacted. So 2-3 questions regarding that. So Q2 is generally a seasonally weak quarter for nitric as monsoons are going on, and nitric is basically used in fertilizers. So is it that we are facing, so demand was down because of the seasonal quarter, and how do we look at it from a Q3 or Q4 perspective? Secondly, we say that while new capacities are coming on stream in Q4, what kind of visibility do we have that volumes will be shared with us? And thirdly, more clarity on our, the capex plan, whether we will set up a concentration plan or a backward integrated plan. That would be helpful.
Yeah, as you mentioned, basically earlier that this year we don't anticipate much impact of nitric in the second half because overall also there is a demand slowdown and some capacity will come up. And as of now, we have a concentration plant order has been placed. And our comprehensive nitric strategy actually we are planning to share in this call, but it may take some more time, and we'll come out with the comprehensive strategy.
Sure, sir. And secondly, our volume growth guidance for FY23.
FY23?
Yeah.
I think overall we are given an EBITDA growth specifically because as you may mention earlier, now the value-added products are increasing this year at quarter to 78%.
Mm-hmm. Okay. And sir, a stable number on the working capital since it has gone up in H2 FY23?
I guess there could be a potential of that to reduce because the way working, the freight rates and raw material prices, there's some softness which is getting visible. So working capital cycle in number of days should remain similar, but on a value basis, I expect some reduction to happen.
Okay. And and last question from my side. So has there been any change on presentation of our numbers from gross sales and net sales perspective? Because last quarter our spec chem revenue was around 1750 crores, and right now it's somewhere around 1680. So should we look at once the net numbers or the gross numbers? Because last quarter our breakup of spec chem and pharma, in that the spec chem revenue is 1750 crores, and now it's around 161, so 1610 crores. What is the right number to look at, and am I missing something, or the presentation has changed, or it has remained the same?
Well, I guess the numbers, I don't think so. The numbers are different. We can probably separately connect and give you clarity. I will see the numbers to be fairly similar.
Sure. Thanks, sir. That's all from my side.
GST impact, there is basically in whatever number comparison that you are doing. So
okay.
Numbers there is a growth, and also in net number also there is a growth. So one number that you have said it is with GST and one is without GST.
Sure. So our presentation has not changed in any form, right?
Yeah.
No. So I'll connect separately.
Sure. Okay. Thank you so much. Thanks so much. That's all from my side.
Thank you. The next question is from the line of Chetan Thakkar from ASK Investment Managers. Please go ahead.
Good evening, sir. So just a question on the gross block that has been transferred to the pharma business and working capital that has moved there.
Okay. So we'll have to pull out some numbers because the transfer is effective 1st July 21, and those numbers would not be, that number keeps on changing. I guess the gross block which would have been transferred would be upwards of 1200 crores.
Mm-hmm.
And working capital, I'll have to pull out some numbers and check on that.
Sure, sir. I'll connect with you separately then for that. Thank you so much. All the best.
Thank you. The next question is from the line of Mihir Damania from Ambit Asset Management. Please go ahead.
I hope I'm audible. So you mentioned in your earlier commentary that you're expecting a 25% growth for both FY24 and FY25. Do you have a potential range of numbers you are targeting either on the EBITDA or profitability for both those years?
Yeah, no. Current year our target is around 1100 crores. So correspondingly 25% CAGR. You take within 2 years targeting around 1700 crores.
Got it. And I just have another clarification. What will be the potential impact on profitability for the maintenance shutdown which we did in one of our plants?
That will be around 15 crores.
Okay. And just another question. Do we expect the EBITDA margin, the absolute EBITDA number to be range bound what we've done in Q1 and Q2 for the next half of the year? Is it what we are looking at?
Yeah, I think some change may happen because where there is a demand pressure, there it may go a little bit down, and where there are some opportunity also because of some shortages of European shutdowns. So on a product to product, there may be some variation because of little bit unusual situation. One is on the demand side of certain products, and second is on supply side because of European natural gas scenario. Some shortages are taking place.
Got it. So what I wanted to allude was, so the majority benefit of any further capex will only be visible from FY24 onwards, not any material impact we are seeing in either Q3 or Q4 of this year.
Yes. So mainly because next 2 years we expect the direct transfer of gross profit to EBITDA because we don't expect much fixed cost or employee cost increase in the next couple of years other than the normal increment. So that's why we are targeting at a 25% CAGR.
Got it. Thank you and all the best.
Thank you. The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
So thanks for your time. We have a CWIP of about 1,400 crores. So we just help us understand what are the major projects that will be getting capitalized in the next 18 months and the capex for the current year.
Yeah, this the contract 3 will get capitalized and some other specialty chemical blocks and nitrochlorobenzene which will get capitalized. So actually second half we expect capitalization about 1,000 crores in this year.
1,000 crores this year. Okay.
Yeah, approximately 1,000 crore capitalization. This third contract and few other specialty chemical blocks also will get commissioned.
Okay. How much is the capex for the current year and how much have we spent till now, sir?
Current year we have spent 557 in this first 6 months. And overall annually, around 1,000 to 1,200 crores will be the capex.
Got it. Next year, what are the projects we'll be capitalizing? Major projects, if you can.
Next year, whatever some of the specialty chemical and nitrochlorobenzene expansion may go towards the first quarter of next year. So most of the capital WIP except this MIA, this ethylation loop, we expect that capital WIP get capitalized by the Q2 of FY24. Except this ethylation loop which will be commissioned in first half of FY25. And subsequent to that will be all the new product line at the new location in Zagadia, where the construction is expected to start from Q4 of this year onwards.
So 1,300 crores of CWIP and current year capex of about 1,200, so 2,500 crores will get capitalized by first half of next financial year. After that, the new capex is only going to come after 25-26. Is that right understanding?
No, that ethylation loop and all also will come in the next year because that also is going to spend. So at least around 2,000 crores will get capitalized. And subsequent to that will be more of a normal capex and some debottlenecking and all. So there will not be any significant capitalization other than this loop which is about 200 crores and some normal capex for about a 12-month period.
Okay. So currently, I mean, if you could just give us a broad mix of revenues from end user segments, say agro, pharma, dye stuff. If you could give us what is the broad number, let's say last 12 months or how has been the revenue share. And once you execute your new projects as in 24, 25, the capex, how should this look like? In terms of end user
this is basically agro, pharma and FMCG which are not that much economy linked. We are around 50%. And 50% will be more on dyes, pigments, polymers and additives. So that's broadly, so 50 means basically 40 to 60, year, quarter to quarter in that range. It will be more around that number. And as we go forward also, this may not change much because across the board, some pharma also will increase. Will be increasing the numbers across the board in all the segments. So even after 2 years, I would not say that it's going to be a significant change.
Okay. So I mean, just to conclude what you're saying it will be more or less similar, but slightly towards agro pharma. Is that the right understanding?
No, currently it's a 50-50 agro pharma and FMCG and others is 50-50. So that those kind of number will remain. It's not like something will become 70 and other will become 30. So
understood.
The same order of magnitude.
Understood, sir. So given the global slowdown people are at least talking about, and maybe if there is a slowdown, our export division, which probably the second segment, which is the dyes pigment, would this be a larger chunk of exports, or which segment is currently contributing to a majority of your exports? I'm trying to understand if there is a slowdown next year. I mean, which segment would probably see an impact?
Actually, exports are more on polymer and additives. And then agro and pigments.
Okay. Would any consideration be done, sir, if you're seeing some slowdown for the next 12-18 months, if you're not seeing much growth, then would our capex intensity slow down, or we'll continue today? I mean, the plans are going to continue.
So we have a long-term visibility of the products. So as such, we are not looking at any slowdown in the capex.
Understood, sir. And one final question, sir. The closing net block as of March was 4,400 crores, which is as of 30th September only 4,000 crores. So is it right to understand that 400 crores is the net block transferred to the pharma division as per the statements given?
No, so you are comparing March versus September. The net block transfer to pharma will be more than that.
How much would that number be, sir?
I believe the net block transfer to pharma should be in the range of around 700 to 800 crores if I'm broadly looking at it. You just have to re-verify some numbers, but it should be in this kind of range.
Got it. So just one comparable number. I know a couple of guys have asked earlier also. So you could just give annualized EBITDA for the company, only for this division or now as the company exists for the previous year, the comparable of the 1100 we are talking last year. If you could just give that number if you have.
We'll have to work on it because as per the scheme, the pharma business continued to be part of the continuing, Aarti Industries for the quarter of April to July 21, and April to June 21, and from 1st July went off. So if we have to look at dissecting that number, we'll have to spend some time and work on that. It will not be available right now with us.
Okay, sir. All the best. Thank you.
Thank you. The next question is from the line of Bobby J from Falcon Investments. Please go ahead.
Hi. Regarding dyes and pigments, what is the end user industry that's being affected? Is it textiles?
Yeah, it is textile, printing ink, and also coating for the automotive. So all these segments have been affected during last quarter.
But the auto industry, at least in India, is supposed to be picking up. So how is it affected?
Yeah, so it's basically global auto industry, and also I think in the pigment sector, there is destocking which is happening, and there has been a lot of consolidation amongst the players. So all that has also come into the effect of overall slowdown in the pigment.
I see. This is in India or globally?
Yeah, it is global.
Okay, so you actually produce the pigment intermediates, right, and supply it to the pigment formulation companies like Sudarshan, etc. Is that correct?
Yes. We supply to the pigment manufacturers, and who in turn they supply to the printing ink guys and the plastic master batches guys, as well as the coating for the automotive paint manufacturer.
Okay, understood. Thank you.
Thank you. The next question is from the line of Tejas Sheth from Nippon India AMC. Please go ahead.
Yeah, hi sir. I have two questions. One, on the 3,000 crore of capex which we are doing over next 2 years, that is FY24 and FY25. What would be that for? And secondly, 3,000 crore of capex for 2 years and 3,000 crore odd of EBITDA for 2 years. So we see our borrowing increasing on FY23 levels as well, considering that we'll be having a tax outflow and a dividend outflow on that EBITDA level. Would that be a fair?
This will be mainly for this new range of product, chlorotoluenes and its downstreams, and also some other specialty chemical which we have identified. And some of this already ongoing expansion also will take place. The capex spend will take place for this second ethylation loop, and also will take place in the next 2 years. So it will be a mix of both the chlorotoluene related blocks, multi-purpose plants at the new location, and this ethylation loop, nitrotoluene debottlenecking, and some other ongoing which will get commissioned in first half of FY24.
Okay. And on the cash flow side, as I said, 3,000 crore of EBITDA we would be doing, and if we subtract the tax outflow and dividend outflow, and also then we incur 3,000 crore of capex, there would be debt increase.
Yeah, there will be debt increase for sure. Yes.
Okay. And just lastly, what will be the tax rate for this year and even for FY24?
I guess the tax rate should be in the range of around 18 to 21%. Next year it should be around this 18 to 20 or 21% kind of stuff, broadly.
Thank you.
Thank you. The next question is from the line of Archit Joshi from B&K Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, we have listed out a 5-pronged strategy in our presentation. So just wanted to understand if you can share some rough timelines. And also a question linked to the same. Is it that they are interdependent? I mean, they're setting up a multi-purpose plant. Would that translate into more custom manufacturing opportunities, or the fact that they have listed that we are looking for more strategic alliances? Or is it that we are already in touch with some customers to look at these opportunities in the base business? So if you can elaborate on these two points. Thank you.
Yeah, you are right. On the multi-purpose plants, simultaneously there will be contract manufacturing. Partly the multi-purpose plant will be used for contract manufacturing. But a strategic alliance and all that, they are more of a different kind where maybe dedicated plan for certain customers and all that. So they are generally at individual level bigger opportunities. The contract manufacturing may be of a variety of products, of a number of the products may be more, but individual product sales may be less. That kind of a thing will happen in multi-purpose.
Understood, sir. Sir, and just in continuation of the previous participant's question, we are looking at commissioning most of these projects, say, before the end of FY24. So just wanted to see what kind of timelines we are looking at, be it the new chemistry that we are adding, with chlorotoluenes, and when would we have a multi-purpose plant set up. And this is other than the parts which we are doing in the base business, which is debottlenecking of nitrotoluenes or adding more ethylation capacity. So the newer initiatives, when will those start contributing with respect to revenue growth? Just trying to look at that.
It will be coming mainly starting from second half of FY25.
Right.
Second half of FY25 and FY26 will be where all the new initiatives will start getting commissioned. Whereas the ethylation loop is expected to be in first half.
First half, FY24, right?
FY25.
FY24. Got it. Sure, sir. So just one last question. So I think we are looking at FY24 as a transitionary year, looking at a significant volume growth with a lot of CapEx that has already gone by. What I was trying to understand is the major projects which have gotten commissioned in the last maybe 2 to 3 years. Most of them have been in the same part of the chemistry that we were into, except for the two contracts that we might have a full-fledged utilization on. So barring these two, what exactly is materially changing going from the second half of FY23 to FY24 that we are, kind of assuming that a lot of fixed costs will get subsumed and operating leverage will start kicking in and there'll be volume growth? Because currently, as we have been pointing out, that the certain pockets where we are supplying products to, be it dyes or pigments, those still continue to be under pressure. So is it that we do expect a meaningful recovery happening in FY24, or is there something else to it, that some new customers have been added or some new products have come into the portfolio?
Some new products are also coming in, and nitrochlorobenzene will be additional thing, where substantial goes also into pharma and polymer. Also, and all the slowdown in dyes and pigment also, we don't expect that to be continuing for a very long time. So definitely by FY25, so I think it has to become a normal year. So whatever is the slowdown which we are witnessing in current year, we expect that to be, by FY25 at least Dye pigment also should become normal and contribute to the volumes.
Thanks a lot for the clarification, sir. Have a good day. Thank you.
Thank you. The next question is from the line of Pujan Shah from Congruence Advisors. Please go ahead.
Hi, sir. My first question would be, let's suppose if we didn't do this maintenance thing, so what would be the volume growth in H1?
Sorry, could you just repeat that question?
Yeah. If we haven't gone for the 3-week maintenance close down, so what are the volumes would be like? Volume growth would be, it would be around 5% or so, or like it would be less than that.
When you're talking about the current, Q2?
Yeah. So I'm talking for H1. Which we are saying that the volume was being flat. So due to one of the reason is because there was a maintenance shutdown in our plant. So I am talking about, let's hypothetically think that the plant haven't gone for the maintenance capex. Would the volume would be flat, or it would be something more marginally improvement we have seen in the volumes?
There's one of the reasons for maintenance shutdown was also there is a pressure in demand. So overall, it not be much different, maybe 2-3%.
Okay. And sir, I just wanted to know your outlook on dye and pigment for the next, like let's suppose Q2FY23. So would it be like this sluggish demand as we have witnessed in Q2, or it would see some improvement, or we have seen the witness of the base, we have built the base, and now there is only an improvement going forward for the dyes and pigment?
Dye side should recover faster. The pigment side, the impact also has come later on, and as Rakesh mentioned, some destocking and everything taking place. So some recovery on the dye side maybe in Q3, and pigment might take to Q4 and all that. So slowly it should happen.
So we are like the demand is being strong. We are witnessing this due to destocking. So we are being expected improvement in demand coming forward after this destocking gets concluded over the distribution side. So that's what our idea is.
Yes.
Yeah. Okay. Thank you so much.
Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. Some of my questions are already answered. Just wanted to understand, as we are mentioning that almost 70-75% kind of products are value-added products for us. So, which industries where we are having this kind of exposure, or is it across the industry where we are supplying? And going forward, which again industry would be focused for us to add more value-added products in that particular industry?
Our end users are quite varied across the board, and our chlorotoluene range will be more dominated by pharma and agro intermediates. So we don't see much polymer intermediates and all coming in that new range of products. So that will be more on pharma and agro, some dyes and pigments.
Okay, and that would be benefiting obviously to our margin expansion.
Yeah, that they are going to be more valuable products also. So EBITDA per kg also is expected to be higher in that range, but that will start impact only over from FY26 onwards.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, sir. Thanks for taking my question. Going on the other expenses which are there, they're going up pretty sharply on a Q2 and a YY basis. So are there any specific drivers for that, sir?
So one of the component would be if you look at the exports, which generally was in the range of around 40-45%, this quarter is around 50%. And the higher freight cost on the exports kind of move the other expenses up. So I don't see any major upticks apart from the export and so.
Okay.
I don't know, otherwise it is something related to some maintenance spend and other stuff. But other than that, it is fairly in line.
Okay.
And sir, typically in the past, we've given for the combined business, 3-year guidances for 24 and 27. Now, in the context of where the chemical business is, how should we look at maybe FY20? We have any numbers for FY24, 25, or 27 as you've guided in the past for the chemical business?
Yeah, FY25 already we have guided. FY23 and the next 2 years. The FY27 guidance I think will come up in the next couple of quarters. We'll have a comprehensive guidance for FY27 also.
So we should assume that FY22 our EBITDA for the spectrum was 1,100 crores. So 1,100 crores compounding at 25% for the next 2 years.
Yeah, that is for the next 2 years.
Okay. Right.
Thank you. The next question is a follow from the line of Rohan Gupta from Nuvama. Please go ahead.
Yeah, hi sir, and thanks for the follow-up opportunity. Sir, in terms of our nitric acid problems which we faced in first half, so you mentioned that definitely in Q2 we have not faced any such challenges, but did you see that the raw material, nitric acid prices were still volatile and that has some impact on our gross margins, or you see that the availability and the pricing both are corrected?
Yeah, basically the nitric acid prices are dependent on the ammonia prices, and globally due to the Ukraine war, overall the ammonia prices have increased significantly and they are at around $1,000 level. So due to that, overall the nitric acid prices for the first half have remained significantly higher due to the ammonia prices. And once the war, and other external pressures ease out, then the prices will come down.
So, sir, in the current scenario, when we see that the benzene prices have started moderating and nitric acid also, so you see that the raw material prices broadly have started coming down. How you see that in terms of our percentage margins? So should we go back to in EBITDA margins of almost 24% kind of range, and with the moderation in the raw material prices, or with the value addition you see that the margin profile can even be better than the earlier?
No, generally we are not tracking EBITDA margin as such. So we generally more on absolute EBITDA. So depending on some correction when raw material when takes place, then obviously margin as a percentage will increase. But any specific numbers will be difficult.
Okay. Actually, last bit from my side. So on this nitrotoluene chain, the product development which you are working on and expecting to commission by 25, how has been the customer acceptance, and have we started demonstrating the products and started doing the sampling for these chain products, or is still some time from the customer acceptance towards it?
No, there are existing products only we are expanding the capacity. The customer qualification is very high. We are already making those products. It's more of a volume expansion for the same range of products. Hello.
Mr. Gupta?
Sorry, your voice was not clear. Okay, I'll take it off. Thank you, sir.
Thank you. Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference back to the management for their closing remarks.
Thank you everyone for taking out the time to join us on our Q2 FY23 earnings conference call. Hope we have addressed all your questions. If you have any further questions, please feel free to contact our investor relations team and we will address them. Stay safe and we look forward to connecting with all of you again in the next quarter. Thank you once again.
Thank you. Ladies and gentlemen, on behalf of Aarti Industries, that concludes this conference. We thank you all for joining us and you may now disconnect your lines.